Hello, traders. Gary Wagner with the Gold Forecast here, 11 a.m. in Honolulu, Hawaii. It is Friday, the 18th day of February. This is the Daily Report, our weekend review. Gold is trading up about $3 this morning, $13.87. On today's report, we are going to be reviewing the week. We will be talking about a long position that we currently have. And I'm also going to talk a little bit about an article which went live this day, today, Friday, in Kitco, in which we use this chart. This is one of the charts that we use. And what I am talking about here is the fact that we have this really strong potential. And this is a static chart. We have actually come close to breaking out at this point, breaking out above this pennant. But looking at the fact that over this last bull run, we have witnessed really three strong flag formations here, here, and here. And in the first two flag formations, they ended with new record highs. And what I am theorizing is the fact that we do have this last pennant formation. There is a distinct possibility that we will go for new record highs here. We'll talk about that all on today's Daily Report, our weekend review. As for the week that we have just witnessed, we have had a very nice solid up week. As you can see right here, this single Henkin candle is representing the week's activity. That's right here. And as you can see on a weekly basis, realize a Japanese Henkin chart will always lag behind, but on a weekly basis, we have a couple of interesting features that we quickly want to point out. One, the body size is beginning to grow. And secondly, we see this absence of the lower tails. Now, why is that significant? Well, in a weekly Henkin chart, what you're looking at is, of course, after a defined downtrend, you will typically get a small-bodied red candle that will almost be doji-like, and that will mark the end of the particular correction. At that point, you will get a series of green candles. They will start out short in nature, and if the trend itself begins to grow, what you'll see is as the weeks progress, the body sizes will begin to get larger. We can certainly see that here. The other thing that you'll notice is as a trend strengthens, you will then get an absence of these lower tails, these lower wicks, as in here. Those are the indications that you are definitely growing in strength in terms of the trend. What will tend to happen on a Henkin chart is as that trend begins to weaken, the body sizes will get smaller, as you can see here, and then they'll eventually change color and grow from green to red. Here, this is representing, of course, that triple top that we had, and because of that, you have a series of alternating candles as we got to this top. That's not very, very typical on a Henkin chart to get this kind of activity. Now, of course, we had the correction that happened in January, and the one thing that you'll notice is it did end with that small-bodied candle, and this being our second week right in here, the second week that it's actually gone green on the Henkin, is a very, very, very strong indication that the market is in for a defined trend to the upside that could in fact be sustained. And for reasons that we'll talk about in a little bit, I do believe that this particular rally will take us to new record highs. Traders, this is the daily chart that I did use in our Kitco commentary today, and this is where we took a look at our pennant lines. As I was doing research, we of course have seen a number of pennant formations form in the market, but what I found interesting is that it appeared to me that we are in the third of these pennant formations since the major run, which began 650 gold around 2008. You can see the first pennant formation right here. This is that long extended pennant in which it had difficulty as it hit these tops. You saw this range really begin to narrow, and as it narrowed, that energy built, and of course when it got to the apex, it broke, and then of course went and created some new highs right in here. The one thing that you're going to notice, of course, is that the top of this pennant are going to be 1, the top of the pennant here is going to be 3, and of course the top of the pennant is going to be 5. The other interesting you're going to notice is that the apex is going to always come at the end. So C, our C wave here, and of course our C wave here. Now I've drawn in our second pennant formation. As you can see, again, this is that range right in here, and we get that same kind of activity. As that range begins to consolidate and contract, once it breaks through the apex, boom, it goes to and makes a record or new record top. Now, we had this extended rally that leads us into the third pennant formation. Now, as you can see, I've just added our lines for our flag formation. Of course, that's this area right in here. And once again, we have that same kind of activity. We're getting our basic contraction. And what we want to figure out is, are we breaking above this pennant right now, or could we witness one more contraction, meaning a zigzag here, before it breaks out closer to the apex? That is something that we'll have to determine over next week. But at least for right now, we are right at this very, very critical point on this particular flag formation. For our final chart of the day, traders, I want to leave us with a daily Henkin chart. Of course, each candle represents 1 day in time. We can clearly see that as the market comes down, this rally begins kind of quiet and soft-spoken. You get these very, very small green candles, so you do get a basic changing of the guards, or the actual color changing, it going from bearish here to bullish here. Also, as you see, you begin to get these candles, not consecutively, but larger bodied candles. You start to see the absence of wicks. It tells you that the strength is growing. However, at the same time, it is stalling in places, and you can see this is that 1365. This is the area where we had that resistance that we had to overcome, and you can see that in the Henkin chart. In the Henkin chart, it is expressed by these smaller doji-like Henkin candles. Now, the interesting thing is, this is the activity of this week. These are daily charts, and it is quite clear you've gotten these, again, larger body sizes and the absence of tails for a consecutive and consistent 3 days in a row. That bodes well for the strength of the market itself, for the strength right now that we are looking at. And it tells me that barring any new fundamental news that changes the scenario, we should in fact look for higher prices next week. As you can see, when I condense this chart, we've got this gorgeous V shape right now that's giving us a clear indication that we are on an upward trend. We have a couple of areas to overcome. Of course, this triple top is the big area, but I think that in terms of resistance, we spoke about 1396, 1393 was the high today. So on Sunday's report, we will look more deeply into the resistance levels, and we will talk about what should we do with the stop that we have in the market. How do we want to trail that up? How do we want to protect the profits that we currently have? This has been Gary Wagner wishing you, as always, good trading, and we'll talk to you on Sunday for another daily report. Bye-bye.